Countdown. I am moving slow. Got a bit of a injury today. Just so you know, so when you hear a bunch of noises, a bunch of it's me basically crying. Let me just get to there. I'm live. Okay. Turn on Do Not Disturb. Get my pinned message. All links. Don't miss a single show. And then we'll pin it. Gonna win for this.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, that's how we grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound.
I can now spawn multiple agents to do deep research. I know about that. Morning, Wendy. Which one's left? Which one's right? There we go. Oh, good morning. Okay. I'll put this one on. I am moving slow. Larry, I've got a hand that has carpal tunnel today. So I've got some ice on it. It'll be a good show. Open with Google Chrome. Open with Google Chrome. Make sure this opens. Yes. Open with Google Chrome. There we go. Open with Google Chrome. Open with Google Chrome. Open with Google Chrome. Open with Google Chrome. All of this will make sense. Open with Google Chrome. I will explain all of this as I go into the show. It's going to be a good show today because I used all of the AI stuff. You know what? I'm going to take this one out. I like this one, but you know what? I just want to take that out. I'm going to take that portion. ASML, I like the stock, like the story, but I mean, who am I fooling? It's not one that I'm getting into right now, even though I probably should. But weekly ETF inflows and outflows. We'll look at that. This was a crazy day yesterday. If you were watching oil, if you were watching the news, I think it was a crazy day. Google Chrome. Morning, Carrie. CPI rises as expected, blah, blah, blah. It says stock index futures fall. I don't know how they fall, but here in pre-market, Bank of America is down 1%. This is crazy how bad the financials are actually reacting. To basically, it's oil. But this particular 4-hour algorithm on here on Bank of America, I mean, it makes you 43% over the last 2 years versus 42% buy and hold. It wins 62% of the time. So it's small wins at 4%, but it's even smaller losses at 2%. So it just keeps you out of this, if you would have gotten in at 50 and gotten out, I set that line at 49 and I'll buy under 49 if I want to add to my positions. in that particular one. So I'm going to get my ice off now. Okay. Let me just put so I don't warp the desk or do something on the desk. Yeah, financials are forward. The market as a whole is forward looking, and it's seeing a potential problem in the market. Mainly, when you hear about AI and job losses and things of that sort, the consumer may become weaker. It hasn't happened. But housing isn't a good thing. The private credit stuff that's going on that you're hearing about, that's not a good thing. So, Goldman Sachs over 900. I mean, again, when you look at something like Goldman Sachs, okay, and you look at the valuation of this, it's 14 times forward earnings. And if you were to just put this into, let's select, we're going to get out of the S&P, okay? We're going to let's look at Bank of America. They're two different styles of bank, but we'll look at the valuation and we'll look at the PE, trailing 12 months, and we'll get rid of price. But let's just look at the PE because, over 1 year, again, Bank of America should trade for a lower value than Goldman Sachs in a growth market because Goldman Sachs is going to do IPOs, is going to make a lot more money. Over 3 years, you're looking at they just got out way ahead of their skis a little bit in the hopes that this is going to be crazy. This goes back to 2021. I mean, remember 2021? Oh, we're going to have so much growth because we're coming out of this. Well, that's when they traded super high. They got down during 2022 when the Fed was raising rates, and we came back up. Now, 10 years. This is where the PE kind of shows you. We're almost at a average, but I would say if the economy is going to go down, you're going to have a lower PE. And so I don't necessarily think it's banks marking in a bad thing. I think it may just be remember I've said it before and Chamath said it, it's re-rating. And so it may just, not want to be that high. I mean, this is 2018, 2019. You can see the PE on, for some reason, Goldman Sachs just popped back then. But it's an interesting kind of thing because, for Goldman Sachs in particular, the valuation's a D. It's just expensive compared to the rest of the market. But its growth, fantastic. Profitability, questionable. I'm not sure why, but it's the cash from operations. Momentum, it's only the 3 months. The last year has been great, but nobody's bringing their estimates down. So that's what's crazy. As long as the earnings continue to be strong, I would view this as an opportunity to get in at a fairly good one. Again, I own Goldman Sachs. I may be talking my own book there, but, we're looking at Google at 305, Meta at 653, MPLX is up 1.2% again. That one just keeps on giving back. Palo Alto Networks at 166. Shopify at 129. This one, I like it to get to 170, and it's abided by this trend line. So you get down there and you're okay. Uber is up 3%, but I mean, Uber's a $100 stock. I don't think you're trading this one. At least I wouldn't. I'm holding this one. Now, Uber is a hold in the quant. Wall Street has a $103 price target on it. Seeking Alpha analysts, the latest ones have all been strong buy, strong buy, strong buy, strong buy. And yet the stock has still gone down. So I don't know. Okay. Let's talk. I'm going to start. I got to take the dog to the vet at 11:30. So I got to probably get going here. Let's start out on QQQ. Okay. Good morning. It is Wednesday, March 11th. I am dealing with some carpal tunnel. So if I make a mistake by typing in a wrong symbol, it's because of my left hand, not my right hand. It's called the stranger. For anybody that's wondering, the left hand is my stranger. We're going to talk about AI as a 5-layer cake, and it's going to be a good one. I took Perplexity, I took Seeking Alpha AI, and I took Trendspider Sidekick for a ride. Because AI is a 5-layer cake, according to Jensen Huang, with energy and chips and blah, blah, blah. We'll look at that whole thing. We'll look at memory winners and losers. We'll look at the oil whipsaw from yesterday. One thing that I learned yesterday, if you go to dailystockpick.substack.com, this is the newsletter that's free. And on Tuesdays, I hold a office hours. And I go back to, basically it's an Ask Me Anything. It's, hey, if you're a subscriber and you want to join on Substack on Tuesdays at 9 a.m. Before the market opens, you can bring your symbol. You can ask me anything that you want. I can't give you financial advice. I'm not a financial advisor, but I can absolutely do one-on-one kind of things with you because, very few people show up. Very few people have questions. So if you're interested in that type of thing, again, Tuesday at 9 a.m. it is for paid subscribers. But I learned something yesterday. Because Taiwan Semi yesterday, and let's talk about Taiwan Semi. This was a stock, if we just look at this yesterday, record revenues yesterday, okay? Record revenues. They announced their earnings, record revenues. And you see it in pre-market. It jumped from 348 up to 354, and it was doing well. That's this pre-market. This was the pre-market yesterday. It just whipsawed. And we saw it go down. So good earnings, it went down. I haven't owned this one since 2021. And let's go look at a weekly chart. And I can tell you, these old lines right here at 185. This was the line. It was about I think it was $120 when Buffett actually finally got out. And he got out around here. And he said, hey, I'm not willing to hold this stock based on the China invasion risk. So I wound up getting out of this stock. Now, I thought I held this stock in QQQ, in VOO, or in XLK, or IGM, one of the tech ETFs that I hold, because this is the granddaddy, the one that's making all of these chips for NVIDIA and Apple, which are their largest customers. And then as I went through this yesterday, I said, why am I not holding this stock based on China risk? Because if China invades Taiwan, guess who the two biggest customers are? It's Apple and it's NVIDIA. And so every one of my tech plays, if China actually moves on Taiwan, is gonna go down. So the actual logic to me doesn't make sense. So at some point in time, I want this stock. Now, is it a super strong buy? I think it was a strong buy. Let's see, it's a hold right now. Wall Street has a $429 price target on it. And you're going to start seeing upgrades. They're chasing it up. Why? Because the revenue's so good. The valuation, it's expensive. 24 times forward earnings. But the sectors are at 21. Again, this is kind of the same thing as NVIDIA. You're paying for this one. Its growth, unbelievable. The revenue growth, 31% year over year, where the sector's growing at 10%. Profitability, 59% gross profit margin. Jensen Huang was asked, what would you pay if Taiwan Semi actually raises he said anything. Momentum, look at that gain. 103% over 1 year. And its revisions, nobody's bringing their earnings per share or their revenue down. So again, I learned something in office hours yesterday. We all learned something in office hours. This was my learning in looking at this stock. Why am I not holding this one? So it's on my list. I like it. I'll kind of probably buy it as well. Now, let's talk about yesterday. We're first going to talk about CPI. It's a non-issue. It's a non-issue for the month of February. but it will be an issue, by the way, for the month of March. So while it wasn't an issue, your oil prices are going to add to inflation in March. And that's going to make it tougher for the Fed to actually cut their rates. But yesterday was even crazy, okay? Another oil shock. Something very strange happened because at 1:14, Energy Secretary Chris Wright posted that the U.S. Navy had successfully escorted an oil tanker through the Strait of Hormuz. Oil prices, and we can go and look at SCO. Okay, a 5-minute chart of SCO will show you the move in oil. And this was from Trump telling CBS on Monday, that, hey, the war in Iran is pretty much over. Nice 8% move in SCO. SCO and UCO are the two triple leveraged oil plays that I've said many times. And if you're watching stuff like this, it's easy. Because, again, the tweet was posted, and then what happened? The post was mysteriously deleted. Okay, reports are now surfacing that Iran may be preparing to place mines in the Strait of Hormuz. Oil has since reacted. It went back to the $80 mark. The Strait of Hormuz, it moves 20% of the world's oil. So you can play SCO and you can play UCO. And if you're watching charts and if you're sitting there and you're seeing news like this, these things are moving quite a bit. This is at 320, and that's 12% in 50 minutes. So again, if you're trading things like this, this is what you want. If you're an investor in stuff like this is a nightmare. Because the White House even denies that any U.S. Navy ship escorted an oil tanker. So we don't know what Chris Wright was actually talking about. Managing and governing by chaos. And that's simply what's happening. And it has been like this for a very long time. So it's not nothing new. It's something that you just have to put into your mind and know that's happening. And between 103 and 140 yesterday, I was in my accountant's office and I saw the move in oil. And after I got out, and I was like, holy crap, that was a great opportunity. I didn't have the chance to take it, but it was there. And I know people in this audience took it. Now, I want to talk about where money's going because there's a couple of big things going. The weekly ETF flows, 4 of the 11 sectors record outflows, but Bitcoin recorded an inflow. And this is IBIT, okay? Crypto is going to start moving again at some point. Now, I have been trading IBIT. I've been buying IBIT. Under $40 for me is a good price for IBIT. If you want to track the price of Bitcoin and look at these things, I have a watch list here in Trendspider, and I've said before that $72,000 mark is going to be resistance. And boy, look at that. Okay, February of this year, it hit 72,000. And then in March, it hit that 72,000. So this is the range that you want to start buying in. At least me. Okay. And I look at both Bitcoin and I look at IBIT. And those are the two things that I use Trendspider for. But I think people will start buying. And that's just based on these inflows. You can see the name of the fund. Here's the inflows of it. Okay. The parentheses, those are outflows. XLF, XLI, XLV, XLC. And here's your IBIT, 770 million. Boy, that's only under the energy, XLE, the energy fund. That's it. So it's number 2. Yes, people are flowing into Bitcoin. And then you had yesterday Amazon. This is the biggest, largest private debt deal of all time. I think it's the 1 or 2 number. It is a huge, huge deal. And Amazon is at $214. You could have gotten Amazon under $200. They are basically funding their build of data centers. This is it. This is it. This is basically Amazon saying, hey, we need more money. We don't want to dilute shareholders by issuing more shares. So we're going to do it from the bond market. And yes, It absolutely moved the markets because you saw treasuries, and we talk about treasuries all the time, how you look at the bond rates and how you need to look at bonds. We can pull up bonds here. The 10-year treasury, it's up 0.26 at 4.19. If we look at this and we look at just yesterday, as Amazon started to flow, you saw a move down in the bonds. Now you saw it move up. Let's see. Yeah. Well, that's overnight. I have to look at this. There was a move in bonds, and it was because people were getting out of treasuries to get into Amazon, and that was the deal. It's very clear that the U.S. treasuries, they're paying for Amazon bonds. Why? Because they think that Amazon can pay them back. It's a higher yield, and money moved out of the treasuries into this. And so, yeah, the AI market is still alive. Now, Amazon, it's a sleeping giant. It's about to wake up. Again, that's a trend line. That's not, bottom left, you can't see it on the screen, but I'll have it in the newsletter. It's the 1997 IPO, okay? Then you have the dot-com crash in 2000, which moved the stock basically from $4 down to less than 30 cents. Then you had the global financial crisis here in the center, 2008. This is a long-term trend line, okay? That's a long-term trend line. If we just pull up, say we use the 4-hour algorithm, say we use this, and I've identified that 188 as a support level. Why? Because that was when Bezos was selling at 200. It would constantly move down to 188, and then it popped to 200. He'd sell $1 trillion worth of stock, and then it would move back. Now you've got this 242 up there, which it broke up here. You can see many times it's gotten to that 240 level. Back here in November, back here in January, back here in February. And then it just dropped on earnings. Why? Because they're spending. And that's the problem. So is this one that I'm trading? No. I won't sell this for under $240. I want this at $240 because long term, I think that's the price that it should pay. And you can see on the trend line, even if I pull up a weekly chart, we've traded pretty much sideways. And by the way, that was 2021 that it hit 188. So this has been absolute dead money in my portfolio. I'd be better off holding QQQ or VOO. But I do believe Amazon outperforms. They've just shown that they can. So I'm taking that one. And again, Amazon, they're going into new business lines. They just launched a health AI assistant that's free for Prime members. You receive free message-based medical consults for more than 30 common conditions. It's an AI health benefit. Now, I just use Perplexity for my thumb because I got carpal tunnel. And I was like, oh my God, tell me what it is. And it's great. It says, hey, if it turns purple, go to the emergency room. If anything in my body turns purple, I'm freaking going to the emergency room. I didn't need AI for that. But Amazon, I continue to like. What does Wall Street think that the price is? Well, their price is $280. That's 30%. Have you seen it come down as far as the actual price? No, I think that's just a difference. And the quant has it as a strong buy. Let's just refresh this. Has a strong buy 4.73. And we can see it was 4.6, 4.6, 4.6, 4.7. The valuation, D+. The growth, great. The profitability, great. The momentum is what's hurt it. And the revisions, analysts are taking their earnings per share and revenue down because they're spending. That's it. One of these first hyperscalers that actually says, hey, we're not spending, boom. Boom, it will take off. Applied Materials formed long-term partnership to develop AI memory. Again, this is memory. Yesterday, what were the big movers? It was memory. It was SanDisk. It was Micron. It was Western Digital. It was Seagate. It was all the memory names. And memory is still the bottleneck. Okay? The announcement follows a similar partnership. AMAT announced a partnership with SK Hynix. I went over for the paid members yesterday, South Korea ETF. That's what this is. And they announced a partnership, and Applied Materials announced a partnership with Micron as well. Memory is still in play. There's still a shortage. Okay? Now, I'm working with Trendspider. If you just Google Trendspider store, let me Google this, store. And you can pull up the Trendspider store right here. I'm working with Trendspider on getting my 4-hour algorithm into the store. They're creating it with a custom indicator. If you look in your Trendspider setup, okay, there's this thing called custom indicator right there. And I was building it with Trendspider over the last like 3 weeks or so. And I didn't even know this. But what's interesting is when you open examples, okay, you can pull up custom indicators. And I thought this was incredibly fun because I looked at the double bottom, okay, and let's go and look at a 2026 top stock. Because if you look at this one and you say, ooh, let me find a double bottom right there. It found it. See that green line right there? Those yellow lines are where I wanted to buy. Those green lines identified a double bottom right there at 216 that you could have bought January 23rd. And go and Google it. A double bottom is bullish. Right there, double bottoms and top chart patterns for Trendspider, trend reversals. Double bottoms are good. And so again, you can get this in the custom indicators, you can get it in the store, you can get it all over. But let's open up another example within here because I found one zigzag, which I liked. This one was kind of interesting. And again, these are just custom indicators. And we talked about IBIT, okay? Zigzag pattern. If you look at the zigzag, this essentially tells you when you can buy and when you should sell. So right now, we're still in a green pattern. Maybe it goes to red. But boy, don't you wish you bought it that when it turned green here at, what, 37? Be up like 4 or 5%, somewhere in that neighborhood. Again, patterns. And that's what Trendspider brings you. Here's the double bottom. I'll put that in the newsletter. And the zigzag indicator, which you can put on your screen. It's great. I didn't even know that this existed. Again, Trendspider continues to amaze me. And you can get it by going to Linktree right here, linktr.ee/dailystockpick. It is printing out on your screen right now. And Trendspider's available for you. You can get my 4-hour algorithm, which, by the way, in the store, it's going to cost $599. Get it for free when you sign up for Trendspider through my link. Again, you don't have to pay the $599. You get it for free. And it's in the store. And again, you can browse all of these other things like strategies, scanners, indicators, collections. I am going to have a daily stock pick collection. So I'm going to be up here with the legends of investing, with Caruso, with Kalshi, with Go No Go, with Shande. I'm going to have a complete collection. Interesting. And so let's go over some of the tools that I have right here, okay? Because I saw this tweet from Shai yesterday. He said, hey, CEO Jensen Huang said AI is a 5-layer cake. Interesting. Energy is the fuel that makes everything possible. Chips are the engine of the entire economy. Infrastructure is the factory layer where intelligence is manufactured at scale across data centers and networks. Models are the intelligence layer where compute gets turned into decision making. Applications are where AI meets the real world. Now, he doesn't give you stocks. That's our job. We have to go and we have to find the stocks within these 5 layers. So I went to Perplexity first, and I literally took that tweet. And I said, can you do some research into each one of those 5 areas and come up with a list of 3 stocks in each sector that would be a good long-term investment at today's prices? I want you to act like a Wall Street growth analyst who is doing research for clients and give me the full detail and then rank the top 3 out of the 15 you find. Let me know if you need more information. It didn't. Okay, Perplexity did a fantastic job. It understood the assignment. And it gave me Nextera, Constellation, Vistra, the chips, AMD, Broadcom, and ASML. Funny, it didn't include NVIDIA because it said, oh, you already know NVIDIA. Layer 3, infrastructure, VRT, which I just got out of, Sienna, which I just told you is a top 2026 stock, Comfort Systems, EME, okay, or FIX, mechanical electric contractors. Layer 4, models, Microsoft, Amazon, Cohere, okay? This is likely a future IPO ticker. It didn't give me the ticker. It's likely that I need to watch that one for an IPO. Layer 5, the applications, Palantir, ServiceNow, and Salesforce. Okay? Then it says, here's the top 15 by layer, and it goes over each one. Now, it's pulling from finance, Yahoo Finance, from investing.com, from Intellecta, from all of these things. These may be people talking their own book. Just understand that. Understand that's one of the problems with using the public AI. But it ranked 3 of them. And it said, hey, the top 3 are Microsoft, AMD, and Nextera. These are, if you wanted a more aggressive top 3, I'd swap NEE for Palantir or ServiceNow to skew further towards software application. It understood the assignment. And this is free. This is a free AI. Okay? Now, a paid AI is up here with Seeking Alpha, and I gave it the same exact thing, same exact prompt. NVIDIA CEO says that can you do research like it is? Seeking Alpha's AI said, I can't provide investment recommendations. This is highly walled against giving financial advice. And so you have to tweak some of your stuff. Again, this is part of Seeking Alpha Pro. You can get Pro for $89 for the first month. It's interesting. It didn't understand the assignment, but it actually created a screener for me. And what was interesting about the screener was that I can scan it and sort it by quant rating. So you've got Fastly, you've got Dell, you've got Arista Networks, you've got Amazon, AMD. There are constants in this AI, okay? So what's interesting about this is we just saw Perplexity bring up AMD. We saw Perplexity bring up Amazon. And by the way, Fastly, don't give up on Fastly. Over 1 month, this is up 147%, and it's still a 4.99 out of 5 on the quant. That's an amazing, amazing return in 1 month. You've got Dell, which is trading at 143, which, I got out of the 130s. It's up 14% in 1 month. So again, this isn't a bad list. It's not a bad thing to do, but it kind of gave you some of the thing. AI sector developments, chip exports, strategic partnerships, agentic AI. It gave you a bunch of information, but I wouldn't say that it understood the assignment. So I'd probably say this one was the weakest, okay? But the shining star, the absolute shining star of this is Sidekick. And when I went into Sidekick, I'll bring this one up. I gave it the same exact prompt that you just saw. So it was 3 exact prompts. Sidekick understood it perfectly. Layer 1, energy. It gave you NEE again. Vistra, again, Constellation Energy. So you've got those. Layer 2, the chips. NVIDIA, AMD, and Broadcom. Those are the 3 top ones. Layer 3, infrastructure. Equinix, Digital Realty Trust, American Tower. Interesting list. Layer 4, the models. Microsoft again, Google, and Meta. Then layer 5, the applications. It gave you Oracle, which popped 12% on earnings last night. It gave Snowflake, and it gave Palantir. So there are some interesting things. It also gave you this great summary table. It gave you the PE, price to sales, the gross margin, the revenue growth, and the analysis consensus. Where, for instance, AMD has 14 analysts that say buy, 5 that say hold. NVIDIA has 25 analysts that say buy, none that say hold. Snowflake has 24 analysts that say buy, and 5 that say hold. Meta, 28 that say buy. So again, it understood the assignment and it gave a great top 3. Meta, love it. Love it. I do think that 82% gross margins, 38% net margins, 24% revenue growth, and 28 PE, unmatched. NVIDIA doesn't just make chips, it controls the software ecosystem through CUDA, the network layer, NVIDIA Link, InfiniBand. Replicating this moat would take a decade. Again, NVIDIA, and we talked about that billionaire who's doubling down on NVIDIA. I doubled down on NVIDIA as well. Google, most undervalued hyperscaler, is the best value among the giant AI platforms. Revenue growing 18% year over year. Google Cloud accelerating. Gemini models are competitive. Search, $50 billion a quarter, is not going away. Waymo is a potential $1 trillion business, yet Google trades at the lowest PE of all the hyperscalers. The DOJ antitrust overhang is a real risk, but the assets are so diversified that even a forced divestiture scenario would likely create shareholder value. 28 out of the 32 analysts have a buy rating with targets up to 420. So this gave you a great list. Again, use the tools that are in front of you. And I had those tools. And I am creating a portfolio in Seeking Alpha that I will create based on the AI 5-layer cake. And I'm going to have that in both Seeking Alpha and Trendspider. And I will take action when I find an opportunity. Again, it's about creating that list. And Tom Lee was on yesterday saying that he expects some 20% reduction of downturn at some point in time later this year. When are you going to have a watch list that you can just take action on? Okay? Because one of the ones in my list is Nebius, and I've been very clear on this. Nebius under $100, I've been buying. And Nebius just surged after NVIDIA plans a $2 billion investment under collaboration. Nebius is one that I haven't gotten out of. I was down. I just continued to add under 100. It was a very simple line. That $96, that $88, they both provided a little bit of support for me. And I'm perfectly fine paying up for this one because, yes, Nebius is expensive. Its valuation is a C. They're not making money. Its growth, A+, 350% revenue growth year over year. Profitability sucks. Its momentum, though, that is a great looking stock. The revisions are down, but this news story pumps it up. So now that it's at 106 in pre-market, I can take some of those profits and I can just book them because it will go back under 100 because, again, this one pumps. But under 100, I'm building that position. Over 100, I can start to take a little bit of profits. It's in my Roth, so I am completely fine not holding this one forever because at some point in time, we talked about double bottoms. Look at this line, a double top right here, okay, at about 130. That is going to be resistance. So as it pumps over 100, we've seen 110 be resistance already. You start to take some profits because I do think that we tend to trade sideways. And that 20% downturn that I just talked about, this is a stock that I don't want to hold when the actual market goes down 20%. Understand what you hold, understand what you want to buy. Now, we talked about on Monday, in the Catalyst Watch, I said, hey, Kohl's may be one to watch because they're reporting earnings. And yeah, they reported earnings. Wasn't great. It was down 1.4% yesterday. But take a look at this because this is what I'm talking about when you actually look at this stock, the earnings reaction to this. Okay, we had earnings yesterday, and this is yesterday during the day, and then you had them announced. This stock could pump. It pumped 17% in 1 hour. Why? Because it's got 23% short interest. Any good news was going to force some of the shorts to sell. But again, this is a fundamentally bad stock for me. So I'm not willing to hold this one. I want to take profits where I can. The 4-hour algorithm on this one, it loses you more than buy and hold, so it's not something I'm willing to look at. But on a pump like that, where Catalyst Watch tells me, hey, you're going to see some moves, maybe it makes sense to get in on this one on a 5-minute. And you don't have to get in at the very beginning. You know, once it gains confirmation, let's get rid of this, because confirmation is a big thing in trading. And I'm trading on a 5-minute chart here. You could go to a 1-minute chart if you wanted to. Okay, a 1-minute chart yesterday. Let's just move this one back, because a 1-minute chart, if you just traded this one after the earnings, once it got confirmation, you know, right here, you could trade this one. It had confirmation here. You know, you went down here, take that 4% loss, trade a confirmation here, and then once it starts to trade under, take that 5% gain. Again, whatever your plan is, you can trade it, gain this confirmation right here, and you got another 5%. Again, 7 minutes, 11 minutes, 23 minutes if you want to do that. If you don't want to do this and you just want long-term holding, take that same confirmation to here on a weekly chart. It's very simple. But Kohl's popped. And you know what else popped? Oracle. Oracle's up 10% in pre-market. Oracle popped on good enough earnings. They weren't outstanding. It's just good enough. They said they don't have to issue more debt. Okay? Here's the thing. Again, going back to a chart of Oracle, we can take a look at this one. Because if we just go to a daily stock chart on this one, where would your first resistance be? I went over moving averages. My first line of defense would probably be right here at 170. And you're trading at 164. That 170 is the 50-day moving average. Your second line of defense would probably be the 200-day, and that's at 220. Remember, just a few short months ago, this was a $330 stock. You've got plenty of time to get in if this is a big move up. And again, I would say that 204 on a weekly is probably going to be a big resistance. It may not have even gone down far enough. It wasn't that great of a quarter. It was okay. But remember what they're doing. They've bought a bunch of chips, and those chips are already outdated, and they're renting them out to the hyperscalers. And so spending money now and depreciating it, this is the Michael Burry situation. So do I want to own this one? No, I'm okay owning this one in QQQ, to be honest. Just, you know, is it great that I need to get into this one? No, it's still expensive. Its valuation, 20 times forward earnings. But what does all that mean? Well, maybe you don't know. So let's go and look. Let's look at the valuation. Oracle shows a challenging valuation with price to sales of 7.08, significantly higher than the sector. This suggests the stock is quite expensive. Growth, mixed. While the forward revenue is strong at 18%, far passing the sector's 10%, some other metrics like operating cash flow year over year are relatively weak. Profitability demonstrates robust profitability with a net margin. That was why these things were good enough, because the net margin, they were able to keep their margin up. Now, some earnings that might be going on later this week. You got Adobe later this week. You got Path. You got Bumble. One that I'm particularly looking at that might be interesting. It's based on the oil situation. It's based on, you know, Amazon having really good earnings, but spending a lot of money. It's Baba. If you can get down, you know, this is March 16th, so it's later next week. If you can get down below 120 on this stock, I might take the chance on this one popping over earnings. Why? Because I think they have the tech right in China. I don't like investing in China. I don't, you know, I've been burned on Baba before. I don't even know if I have my old notes in here, but it was 2020 to 2021. I bought here, I think, at about 212. I think I sold it at about 230. It wasn't a great trade because it went all the way up to 311, 314. So I didn't do a great job in trading this one. I thought it was a long-term investment. Turns out the China was just weak. I didn't like it. You had this golden cross right here. Where was the stock trading? 120. So if we can pull back to that 120, I like it to continue this move. And remember Bollinger Bands. You're trading at the bottom of the Bollinger Band. Do I want it right now? I don't know. The reality is the 4-hour algorithm just triggered me today at a 139. Do I take the chance on that one? Well, 95% versus 86%. And at very least, I'm going to go up and ask Sidekick. So that's the show for today. Again, great information for you. I will have all of those stocks that Perplexity, Seeking Alpha, and Sidekick found in the AI for the 5-layer thing that Jensen Huang talked about. I will have those in the newsletter. If you have any questions, the newsletter's free. You can get it all here on Linktree. Trendspider on sale, 35% off. Again, you can start with a 14-day trial, but use my link, sign up for an annual plan, get the 4-hour algorithm, get your access to Sidekick. For Seeking Alpha, I always suggest Premium and Alpha Picks. Why? Premium, you saw me use Premium, based on the quant, based on all of the AI analysis that I did. And Alpha Picks, it's just a data-driven portfolio. When I get more money in my account, I'm usually putting it towards this portfolio. And it's because of the return, 293% return versus 80%. Again, it's on Linktree if you want to check it out. I suggest the bundle because you save over $150 when you sign up for the bundle. And that dollar amount per year, I have dwarfed that year after year with the gains that I've made using these two tools. So if you have any questions, again, everything's on Linktree. The newsletter's free. I'll talk to you Friday. Bye. Oh, God, my thumb is killing me. I'll get to your questions. Let me just throw this into iMovie. The dogs are snoring. Desktop. There we go. Let us colorize this one a little bit. I looked like an Oompa Loompa yesterday. Da, da, da. There it is. Okay. Da-na-da-na-na. Green screen. Oh, why is that not grabbing it? Copy. I think both of them are down there snoring. Man, that's a deviated septum, Daisy. Do. Export. Yeah, this one had great ideas. Not as much on the analysis part, but the ideas part, Larry, I think it was golden. And this is what you have to do and step back and do. Wendy, we were talking about SMH yesterday. Yeah, SMH, I like SMH. And I think, Wendy, you were the one that told me you like SMH more than SOXX, I think. And that started me looking at SMH versus SOXX. Morning, Donovan. And you know what? Let's put VOO in here. Let's put QQQ. Okay, we're going to match these. And we'll select the metrics, and I want to do total return. So when you look at these over 1 year, you can see SMH is the big winner. SOXX, second biggest winner. 3 years, again, SMH is the big winner. 5 years, SMH is the big winner. So why I'm holding QQQ, I have no idea. But the holdings are what's doing it. It's NVIDIA, Taiwan Semi. Oh, SMH does have Taiwan Semi. Interesting. Yeah, this may be my now go-to. I may start building up SMH. I like this one. I mean, it's got Micron. I mean, I've got mid six figures now into Micron. I went big on Micron yesterday. Yeah. I went big on Micron. I think I got it at like 390. Under 400 is what I said. I didn't get it at the 380 range. But I did get it at 390 something. But I like SMH. In fact, you know what? Here, SMH. I'm going to put that in my buy on pullback. Oh, actually, it's got a 4-hour algorithm doesn't work. Let's do this. What was this? Yeah. There we go. We're going to do this one, new chat. This one did a great job of XLE. So I'm just going to put in SMH and we'll see what it says. We'll see what it says. Morning, DJ. Eli. Morning, Donovan. Okay, now I need to Google AI Studio. We're gonna take this, upload files. I will take this guy. No, it's not the one I want. I want this guy. That's the one I want. Can you make this person into a happy cake maker whose cake? Okay, run. Let's see if it can make I wanted to make this a happy cake maker. There we go. Perfect. Okay, let's download this. We will go into Canva and YouTube thumbnail. What's the name of this one? AI 5-layer cake. Baker. Cake. Let's see if it comes up. It's coming up with cake. Let's do I like that one, but to do that's actually a video. Huh. Let's take out the cake. We'll just do a YouTube thumbnail. Let's see. We'll do it takes me, there we go. Yeah, let's do this one. Customize this template. We will get rid of this guy. We will upload file, generated image, and let us edit. Magic grab. And grab. We're gonna move him. Yes. Perfect. Okay, we're gonna make place background. Probably this one, blue color doesn't stand out. Let's see if red stands out. There we go. Okay. AI. The AI 5-layer cake. And effects, we're gonna go outline. I'm gonna do black and thickness. There we go. And we're gonna move this one over here. And we'll say stocks to buy. I don't like that effect. Winners and losers. I wish I could match style. Effects, outline, black. There we go. And let's, okay, effects, glitch. No, let's do outline. There we go. We'll do uploads and it brought up Trendspider, seeking alpha. And applied materials, I think I brought up that one. Bloom energy. I know I didn't bring up that one, but I like it anyway. Western Digital. Nebius. Astera Labs, Figma, Perplexity. Coles. Interactive Brokers, select Constellation Energy. Coinbase, United Health, HIMS, Vistra. IONQ, Marvell. I've got to slow down because I'm putting in too many here. AppLovin, Finviz, Snowflake. I probably should put them on the cake. Lilly, Walmart, Target, MicroStrategy, Carnival, Micron. Broadcom. Oracle. It's a bit too busy already, but AMD. Amazon. And where's my NVIDIA? There we go. You know what? I'm going to bring this off. Bring that down here. And we'll make this bigger. I don't really need the winners and losers. No, I don't need that. We'll do that. And we'll bring Trendspider and Seeking Alpha up here. I probably can just move these. There we go. And I won't. Let's do transparency. There we go. There we go. Share, download, quit. Okay, I'm gonna get out of here. You guys have a great day. My thumb hopefully will be better. I'll talk to you later. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.